stock of the day, don't we? And today, South32 has cut its annual coal output forecast, citing a double whammy from a workers' strike over pay and an extended longwall move at its Appin mine. However, it has finalized a new enterprise agreement at Appin since the end of the quarter with a term of 4 years to 2026, so that helps to plug those workforce disruptions. It also says that it expects to produce 7 million tonnes in total coal production for the year, and that's compared to 7.4 million that it forecast previously. All of its other production guidance for fiscal 2023 remains unchanged. So, Gaurav, I'll start with you because, these companies are generating a lot of cash right now, although South32, admitted today that its cash generation will be weaker.
Yep. South32 is one of the few genuine conglomerates in the mining space. You can argue BHP and Rio are those, but there are one or two commodities that really drive performance. Whereas with South32, it's quite evenly dispersed between a range of commodities. Now, one of those is coal, and prices are very high, but production has been hampered at their Illawarra mine, and they've hinted, or I think they've done more than hinted, in fact. I think they've actually announced that mine will close eventually. They won't be investing new capital. So it's not a surprise to see less resources going into labour and potentially lower supply coming from there. That is what's happening across the industry writ large. What's really driving the price at South32 at the moment is what's happening in the aluminium complex. We've seen energy prices just soar across the globe, and aluminium, many people know it as manufactured energy because it is one of the most energy intensive processes you have in the modern world. And so there's a lot of supply just starting to fall off in alumina and aluminium. The margins are being crunched across the industry, and that's impacting South32 as well. So there's a lot of pain being felt across that sector. For a lot of people that might seem scary. For me, those are the pangs of opportunity. You only get a chance to buy mining assets cheaply if mining prices are low. You don't get to buy, well, unless it's coal, you don't get to buy high prices and at low equity values ordinarily. And I think South32 is interesting today, but it's not quite a buy yet. We've doubled our money, bought and sold twice now over the last 8 years or so at South32, and it's a company I really like. I rate management. I'm on the record as saying it's the best management in global mining, and I think the management has reformed that portfolio, which is a much better business now that when it's split from BHP, and I think it's going to get better over time. But the price is just not there for me yet. A long-term investor can probably still buy from here and do fine, but if you're going to buy capital-intensive cyclical mining stocks, you want to buy them very cheap. South32 is not quite there yet, hold.
Okay, Mathan, when in the cycle would you be willing to buy South32, or is it today?
It's actually, Gaurav's right. It is a cyclical stock. So you got to understand the whole cycle of where we are, and the market is starting to appreciate the whole global recession play. We got the Australian PMI came in today, where the manufacturing and services in contraction. So it just tells you, and we are probably better placed than most other countries, especially in the developed market. So that just tells you where we are in a global picture. So demand's going to be weaker, and commodities tend to struggle, and that's going to play out. South32, without a doubt, it's in the top 5 diversified miners. You've got BHP, Rio, then you've got South32, IGO, MinRes. Exactly. Don't worry, I was going to mention that. I know you would jump in if I didn't. So these are the guys that you look for when you have a bottom in the resource cycle. You just buy those ones because they cover so much of your space, and eventually they'll come through. Cost pressures are obviously in play, and that's hurt South32. We've been out of miners mainly because of the recession cycle that was going to come through, and that's hit some more than others. Copper is down more than gold over the last 12 months, and you don't do anything without copper, whether it's electric cars or building houses. It doesn't matter what you're doing. So that just tells you where it is. So we're looking for those indicators. They're not moving yet, so I'm not jumping in. But this is in the top 5 mining stocks that you buy in our market. So it's definitely interesting. And Gaurav's right. If you're a long-term investor, you can start nibbling because you've got the discount to play with. But I think it goes lower, so I'm waiting. But yeah, look, this is a top 5 mining stock, so you just can't go away from it.
So Graham Kerr has been leading South32 since October 2014. You mentioned amongst the best management, if not the best management globally in terms of a mining company. Do you know, are there any succession plans? I mean, we're now 2022. Does that start to become a little bit of a question to you when you've seen leadership being expressed for that length of time?
He gave hints of being a very good manager because Graham Kerr was an executive in BHP, and he was in the running to get the CEO job at BHP. And one of our telltale factors is when you get a frustrated wannabe CEO who doesn't get the job and then goes to a smaller business, it's not just a job for him. He's got something to prove, and it becomes a mission and not just an occupation. And I heard Graham Kerr speak at the IPO of South32, and I could hear that from him. You know, he had something to prove.
Yeah.
He'd missed out on the top job. He believed in these assets. They represented 3% of BHP's profits, but run independently. There's so much you could do with them. I think it was such a great opportunity at IPO. I don't think he's going to leave anytime soon. He's still relatively young. He's got a lot of support from the board and from investors. He's done such a good job. I'd be surprised if he left. It'd be a negative for me if he left, but there's a good team around him as well. So this is not just a one-man show. There is a good technical and operating team here. So I'm quite happy to stick with management for a while.
I like it. Interesting. Thank you, guys.